Welcome to the Brain Picker Pro Show, live from Lake Wiley, South Carolina, and all the way across the ocean from somewhere in the UK is my my good friend Carl Allen. Now, this is going to be a little bit different than a lot of the training, the Brain Picker Pros that we've done, because normally we're talking about real estate, right, guys? But I've had a lot of people ask me about business, and we talk about growing a business of real estate, and there's a lot of people who I've helped coach and mentor that they actually have a business other than real estate that they've already started or maybe purchased, or maybe they have a business that they want to sell. So I searched high and low, and I found the man, the legend, and the myth. Live here today is Carl Allen, who is, this guy has been responsible for hundreds of transactions, $50 billion in transactions, and everything from big, small, and in multiple countries, everything. So I'm just really excited to have him on, and we're going to do a follow-up webinar. Just remember this. We're going to do a follow-up webinar with some detail. Not that this is not going to be detailed, but we're going to do a follow-up webinar with some more in-depth training coming up in the next few weeks probably. Right, Carl?
Absolutely. Be happy to do that.
Awesome. So, Carl, why don't you first start out and tell our listeners a little bit about yourself?
Sure. So I'm Carl Allen. I live in the city of Manchester in the UK. I also have a house in Florida, and I spend a lot of time down in Australia as well. I've been a deal maker. I've been a business buyer, business seller. This is my 26th year, so I'm almost 48 next month. And I grew up on Wall Street. So I left university in 1992. I went to work for Bank of America. So I was brokering, really large deals for the likes of IBM, GE, Boeing, Lockheed Martin. So I kind of went through the whole Wall Street thing, and then I left about 2002, 2003. I went to business school in Chicago, did my MBA, and then I spent some time in private equity doing deals. I invested in a business, software company, which we then sold to Hewlett-Packard. So I went to Hewlett-Packard along with that deal, and I was one of their mergers and acquisitions directors. So I was flying all over the world doing massive deals. And then my life massively changed just over 10 years ago. It was February the 1st, 2008, and I was in a boardroom in Moscow. I was buying a business with HP, and my wife was 36 weeks pregnant with our son, Josh, and we thought it was fine for me to travel. And then I got the dreaded phone call. The phone rang. It was my wife. She's like, "Oh my God, I've got into labor. We're going to have the baby. You got to get back." So I had my phone, my wallet, my passport. I ran out of the building, ran into the middle of the road, held down a cab, which you shouldn't do anywhere, but especially in Moscow. I got to the airport. I got on the plane, flew home, and I literally ran into the hospital about 5 minutes before my son came out. So he came out, and I'm sat there cuddling this little guy, and I just thought, I can't do this anymore. I just don't want to work for anybody else. Whilst investment banking, corporate M&A, it's very lucrative employment, but I thought that was the trigger that said, I'm going to be an entrepreneur, and I'm going to do this for myself. So I quit on the spot, and I was going to take a year off, but after about 3 weeks of diaper changes and walking around, I thought I got to get back to doing something. So I decided 2008 I was going to be a broker. I was going to broker small businesses, and my first client, it was a $5 million transport business, quite large business, close to where I live in the UK. And I went to see them, and we signed a contract, and I wrote the prospectus for the deal, and I marketed it, and they said, go get us top dollar for this business. So I found a buyer. We were going through the deal, and the night before closing, so I've been working on this deal for like 3 months. The night before closing, one of the brothers called me up who owned the business, and he said, we're pulling the deal. And I had $400,000 commission waiting for me on the closing of this deal. he said, we can't close the deal because the buyers just come in, and he said, tomorrow they're going to fire all the employees, they're going to change the name, they're going to shut the site down, they're just going to relocate the operations to their own entity, which was about 200 miles away.
Right.
So I went down and I was sat in the guy's kitchen, and he said to me, what do we do? Can you go and find me a buyer that's not going to fire my employees, not going to treat my customers in a bad way?
Right.
It's going to honor the legacy of the business that I built. And I just said, I'll buy your business. And he said, what are you crazy? I said, I'll buy your business. I said, we're not going to get anywhere near the price that the corporate's offered, but if you let me leverage your balance sheet, let me finance your trucks and your real estate, then I can raise enough money to give you a closing payment, and then I'll pay you some money over 3 to 4 years. And the guy hugged me, and he said, if you can do that in 30 days, we'll give you the business. And what I also said is, I said, well, I'll counter my lack of experience in the sector. I will give your general manager, your finance guy, and your sales guy, I'll give them all 10% of the ownership. So I'll own 70, 10% for each of the stream, we'll run the business together. And that was my first individual, no cash down business acquisition. And we owned that business for 3 years. We doubled the size of it, and I made quite a lot of money when I sold it. So that gave me kind of two big kind of brainwaves. The first one was I knew that there was going to be thousands and thousands and thousands of these people that when they're ready to sell their business, they don't want to sell to a competitor. They want to sell to somebody that's going to be a safe pair of hands, that's going to look after the business that they bought. And then, so I started doing all these deals. And then about 2 years ago, I was just inundated with people saying, hey, can you teach me how to do what you do? I buy and flip real estate, or, I'm a financier, or I'm stuck in a 9 to 5. I want my own business. I don't want to start one. I'd rather buy a business already that's profitable. I don't know how to do it. I don't know how to raise the money. And I don't have any money to personally put into the deal. So I created my coaching program. So there's over 1,000 people all over the world in that program now. I think 13 different countries, mostly in the US and the UK and Canada, but in other countries like Australia. So I'm coaching and I'm mentoring these people just to follow my proprietary 10-step system for buying businesses, no money down. And that's the system that I'm going to teach your audience, Larry, when we do the follow-up webinar.
That is great. That is great. So, Carl, tell us a little bit about what is the ideal size of a business that you might want to acquire, or a person might want to acquire, because you're probably not talking about Fortune 500 companies. You're talking about middle America or anywhere in the world, actually, but businesses that may have anywhere from X to X number of employees and X to X revenue.
Yeah, so it's a great question. We typically filter on revenues. So generally, we're looking at businesses that are generating annual revenues between about $1 and $5 million.
Uh-huh.
And I'll tell you why. There's two reasons. So if you want to buy a business that's smaller than that, then typically what you're doing is you're buying a one-man business.
A job.
So you're buying a job, and that business doesn't have any processes. Doesn't have a management team. It doesn't have all the infrastructure that a larger business has. So for that reason, we kind of don't really start until around $1 million. If it's kind of 6, 7, 800,000, and it's got all those things in place, then we'll definitely look at that. And one of the reasons why we stop at 5 is because once you go over 5 million, there's a lot more competition for buyers, and a lot of the kind of psychology changes. Because what's interesting, if you look at the market statistics, as of right now, in the USA and Canada, there are 2.44 million businesses for sale today. And according to Forbes, Inc., Wall Street Journal, BizBuySell.com, only about 1 in 13 of those businesses are actually going to sell in the next 12 months. About 200,000 businesses a year change hands.
Wow.
So that's 1 to 5 million level. when you go above the 5 million level, then those businesses are large enough for, if it's a $10 million deal, then a $50 million business will go and they'll buy it. Whereas a $50 million business, won't buy a $5 million business. It's too small. And when you're doing deals, it takes the same amount of time and effort to do a large deal than it does a small deal. So that's why we stick to the kind of 1 to 5 range. And we're typically looking for businesses that are good businesses, but the owner is motivated to sell. Typically retirement. They could be sick. They could be dying in some cases. They could be bored, frustrated, burnt out, run out of ideas. It doesn't matter what it is. And if you go back 20, 25 years ago when I really first started in this business, it was typical, especially in the US, for a mother or a father to kind of hand the business down to a son or daughter. But that's changed massively over the last 20 years because a lot of children now, they want to go to college. They want to be bankers and lawyers and doctors. They don't want to run dad's $3 million engineering business in Idaho or in Pennsylvania. They don't want to do that. So all these owners, they don't have an exit strategy. They don't have a way to be able to get out of their business and retire. And the statistics are incredible. According to Forbes, there's 10,000 baby boomers retiring every day in America, every single day. Wow. And 19% of them own a small business. And they don't know how to sell their business. They don't know the process. So what I'm coaching people how to do is I show them where to find these deals. I show them how to vet them. I show them how to build phenomenal rapport and relationships with the sellers and how to negotiate these. It's what we used to call on Wall Street a leveraged buyout, so an LBO. Right. And basically buying a business using the business's assets and its own cash flows to finance the deal. We make part of the payments at closing, which is the day we take ownership, and then we make the rest of the payments over time using the cash flow that the business is generating from its continued operations. So that's in a nutshell what we do.
Man, that is huge. It sounds really, really complicated, but I know you have simplified it quite a bit, right?
Yeah, I dumbed it down because what was amazing about it was it's when you're an expert in something, this is the only thing in the world that I'm really good at is buying businesses, growing businesses, selling businesses. I'm really good at that. I'm terrible at everything else. But when I've been doing this for a long, long time, but it's only when I started to break it down into a process that somebody just with a basic business experience could follow and model and emulate and be successful. When I broke that down into a process, a unified process, it actually made me better at what I do. It made me more systematized. It allowed me to look at a lot more deals because I was following the formula and all of the documents and models and templates that I created for my audience that they needed to be able to plug and play and do this quickly. When I started using my own stuff like that, I actually became better at at what I do. So that's what I do, and I absolutely love it. And people ask me a lot of the time, why did you build a program? And for me, it was two things. It was to empower entrepreneurs all over the world to buy businesses, not start businesses. Because again, the statistics they're absolutely terrible. Michael Gerber, who wrote the E-Myth Revisited, it's the best book I've ever read, by the way. He's worked with hundreds of thousands of startups over 40, 50 years. And right. He tells us that 90% of people that start a business will fail inside of 10 years, 50% in the first year alone. It's so much easier. It's easier, it's quicker, it's far less risky to go and buy an existing business that someone's built that doesn't want anymore, because that business has all the things that startups don't have. It has cash flow, credit, premises, equipment, employees, customers, suppliers, reputation,
revenue.
When you start a new company, you don't have any of that stuff.
Right.
And there was over 7 million Americans in 2017 went and started a brand new company. Unbelievable. So
wow.
Yeah, and 96% of them will fail. They'll lose money, time. It's crazy. And I was being interviewed on the radio yesterday, and they said to me, so give us an analogy, Carl, about why you would buy a business rather than start one. Give us an analogy. So I'd literally that morning, like we just got Tesla over here in the UK. We've never had Tesla before. It's just arrived, so I just ordered a Tesla. And did I go and buy the glass, the wheels, the bodywork, the seats, the battery, and then did I figure out how do I put it all together and make it work? Or did I go to the dealership, order one that they built, and finance it through them? That's what I did, and that's exactly what I do when I buy businesses. I'm buying a ready-made business that someone's built, it's operating, it's profitable, it can certainly grow and improve, and we do all that as part of our work. But then we use that business asset and the cash flows that it generates to generate the financing, to be able to do that deal. And there's so much financing available in the United States. It's insane. I wish we had the financing market in England and in Australia that we have in the US. Right. It's just, there's trillions of dollars out there to buy businesses, but most people, they just don't know how to do it. So I'm just trying to connect the dots with my expertise and my process.
That's great. That's great. I've heard a lot about if you're ever going to sell your business or if you're building a business to sell, there's certain things you need to do. So what are some of those things? Because we have a lot of people on here watching that, maybe they already have a business that, maybe they're like you said, they're a tired business owner. They've run out of ideas. They want to move on and do something else. I mean, I've taught a lot of people real estate that have owned, pizza franchises, fast food franchises, that have owned manufacturing businesses, engineering companies and firms. What are some of the things that you recommend people do to prepare themselves to be able to sell the business, which at the same time, it will also tell people looking to buy one what they need to be looking for?
Yeah, so that's a great question. And, I look at 50 to 60 deals a week, and 90% of the deals that I look at, they're just not, the businesses are not ready to sell. So, right. Point number one that you must do when you're selling a business is get all of your ducks in a row. So get all of your administration sorted out. Get all of your financials organized. Any buyer's going to want to see your last 3 years of financial accounts, your last 3 years of tax returns. Right. They're going to see all the material contracts that are inside the business, any shareholders agreements that you've got, your articles of association, all that stuff. Get all that, get it all together. So then, if I'm selling my business and Larry, you want to buy my business, and you're saying, hey, I want all the information. There you go. Quickly, takes 5 seconds. It's all in one place. It's astonishing what happens. I was in Orlando a couple of weeks ago on vacation, and one of the guys in my program, Ed, who's in near Miami, he calls me up and he said, hey, I've seen this business. It's a $20 million construction business in Orlando. It's like 2 miles from your hotel. I was at the World Center Marriott. He said, if I drive up, can we go and see it? I'm like, sure, let's go and see it. So we went in and we're looking at this business, and the accountancy deal in that business was basically shoe boxes or the pieces of paper. Wow. There was no proper accounting system.
For a $20 million business.
$20 million business. It's just crazy. So getting all that stuff all lined up so that you're making it really easy for a buyer to kind of, look at the numbers and look at the business is really, really important. The second thing, and this is probably even more important, is, as I mentioned before, particularly with smaller businesses, is most really small businesses, they're impossible to sell because you don't have a business, you have a job in your own business. So if you were to leave that business, then your buyer isn't going to be able to operate it because all the systems and processes are in your head, all the relationships are with you. There's no infrastructure, there's no systems which make the business work. So that's the second most important thing. And then there are lots of ways that you can quickly groom a business for sale. So you can put in some growth strategies, you can amp up your marketing, and really get ready. And then what sadly happens in a lot of deals is when a business does list for sale and buyers start to look and they make an offer, and then they sign an LOI, which is the kind of document before you close, and then the buyer's going through like their due diligence, checking that the business does what it says, and the lawyers, the attorneys, they're drawing up the legal paperwork. During that process, what happens is the seller, they take their foot off the gas, and the business performance starts to come down. Right. So it's like the relief, the pressure's off the shoulders. I found a buyer. Carl's going to buy my business. He's going to take it over. I don't need to worry about the stuff anymore. And the performance of the business drops. And what the only thing that happens then is when we come to close, because the numbers have come down, I'm going to be renegotiating the terms based on a kind of underperforming business. So it's really important when you do sell and you have an offer and you're going through the transaction, is keep your foot really hard to the floor and keep driving the business forward. Really, really important.
And that's really, really important. That's really good. I'm glad you mentioned that. It reminds me, like in commercial or multifamily real estate, it's all based on the income. I've seen multifamily property owners that know they're going to sell the business. They will continue bringing in the rental income, but they'll stop making repairs, maintenance, that sort of thing in the last, 3 months, 6 months to make their income look much higher, which that's going to make their value look much better. What are some things that you can let us know to be aware of as far as, expenses or things to look out for when somebody's trying to sell their business to make sure they don't get taken advantage of?
Yeah, so it's kind of slightly... So I love the real estate analogy there with kind of repairs and expenses. I think that's a great point you just made. In the business sense, though, it's kind of a little bit different, almost kind of flips around, because what you probably shouldn't do during that period, and we're only talking about 4 to 6 weeks.
Right.
So look at the timeline of doing a deal. You make an offer, you sign the exclusivity document, which is called an LOI, and then you basically got 4 to 6 weeks where you're raising the financing, you're doing the legals, and you're doing the due diligence. It's quite a short space of time. So in that period, whilst you've got to keep your foot to the floor as a seller, what you should also then not do is do anything drastic. So don't go out and hire a whole bunch of new people. Don't go and buy a whole load of new equipment. Don't change up and dramatically increase your marketing spend, because your buyer might have different ideas and different thoughts about how they're going to do that. And especially if that buyer is another business, because one of the reasons businesses buy other businesses is, you can double your revenues overnight by buying another company. And when a business buys another business, there's a lot of cross-selling that you can do. So, if a computer software company bought a computer services company, they can sell the software to the services customers and vice versa. And then as you bring those two businesses together, you can take out a lot of that, duplicate cost.
Right.
And then for the buyer, the cash flow is going to go up, so they're getting a kind of a better deal. And that's also why competitors, trade buyers, other companies will offer slightly more than we will as individuals, because they're able to get those synergies out of the deal. Although most small business owners, they don't want to sell to a competitor, because as I mentioned before, they don't want their business destroyed, their employees let go, or everything, changed. They'd rather tell to somebody that's going to look after the business and take it to the next step.
Sure. After all, it was their baby, right?
It was their baby. It's like you're selling your children. You want to make sure that they're going to be, well looked after and not completely destroyed. And trade buyers, they're very notorious for They look at all these deals, they sign non-disclosure agreements, they get all the customer lists, employee lists, the revenue numbers, and then they'll go and handpick and steal the people in the marketplace. It's sad, but it happens every day, and I've seen a lot of great businesses destroyed. I made an offer on a business in January, great business in California, great business in California, in LA, and I was about $1 million shy of a competitor that wanted to buy it. And the guy just said, you know what, love you, Carl, you can do a really good job with this business, but I'm going to sell to the trade buyer. The trade buyer never even completed the deal. He went through the due diligence, he got all the data, he stole 40% of the customer base and 35% of the best employees, and the business died in a space of 3 weeks.
Wow.
And the guy got nothing. He had to close the business down, liquidate it, because the buyer had come in and just raped and pillaged it, didn't even buy it. Came in, got all the data, killed the business in the market. He was spreading rumors on social media that this business was in serious financial peril, so customers were fleeing, employees were leaving, and he was just there welcoming them into his own business. So,
wow.
Sadly, that happens. So as individual buyers doing these types of deals, we offer a much safer, much quicker, less risky way of buying the business. We're not offering, the bigger valuations, but from my research, 79% of sellers, cash isn't top of mind when they sell. They want that safe, trusted individual or individuals that will come in and, just treat the business with some, respect and take it to the next level. And the sellers that I deal with, they're cheering me from the sidelines. The last business I bought about 3 weeks ago was a media company in Burbank in California, just near the Hollywood Hills. And I've actually kept the owner on 2 days a week to do some business development work for me. And she's just cheering me on from the sidelines. She's
right.
just so thrilled with the deal. And that, we're keeping the legacy and the brand of the business alive. To her, that's all that mattered. She's 62 years of age. That's what she wanted.
Wow, that is great. That is great. Tell us a little bit about what is the end goal, because like you've talked about buying a couple of different businesses in the U.S., you're in the U.K., and you've talked about Michael Gerber mentioned the difference between a job and a business, right? And I love Michael Gerber as well. In fact, he wrote the foreword to my first book.
Wow.
Yeah, yeah, that was pretty cool. But yeah, so tell us a little bit about what is the end goal, because I know you're not buying yourself a job, you're buying a business as a business owner, and it already has employees that run the business. Yep. So what's the goal? I mean, are you looking at a 3-year hold, a 5-year hold? Is it ultimately to cash out or bring in other partners, or what's the goal?
Yeah, all of the above, Larry. So I'll give you, some examples. So I either own all or I'm invested in 17 different businesses right now. They're in Australia, the UK, Ireland, Germany, and the United States. So in Florida, in Boston, in LA, in Texas, and in Scottsdale, Arizona. So I'm not active in any of my businesses at all. I'm not an owner manager, so I'm an owner investor. So when I do deals, in some cases the seller stays on and runs the business for me. In other cases, I'll promote, a key member of staff, a key number two, and I'll gift them a small piece of equity to be able to drive that business forward. I'm not paying for my equity because I'm doing no money down deals. I'm not buying shares, so I can give some of my equity to other people. And what I've started to do lately as well as I'm scaling up is I'm partnering with other people. So I'm even partnering with people in my own coaching program. So they're finding deals and then they're coming to me saying, hey, I want to partner with you 50-50. If it passes my test, we'll do that deal. But the LA media deal was just like that. I partnered with a guy called Paul Hollins. He came into my program about 3 months ago. And then the next 4 deals that I'll close in the next 6 weeks, they're all kind of partner deals as well. So my strategy is I'm not flipping. So I'm technically business flipping, but I'm not flipping in like 3 months or even, back-to-back transactions. I tend to hold on to my businesses for at least a year. Depends how they go. If they absolutely fly out the blocks and, somebody comes in with a crazy offer, if we start to, annoy our larger competitors in the market and they come in and they want to take us out, we will sell, subject to them, protecting the legacy of the business. So typically that's, that's our model. It all depends. I've owned businesses. I'm still in a deal that I bought 7 years ago. The business I support in LA, I could sell that business tomorrow and make 7 figures for 2 months' work. But I'm probably gonna keep hold of it for a little while. But that's part of the fun. And what's amazing is most of the businesses that I buy and most of the businesses that I see, and this is kind of very typical of your kind of baby boomer owned brick and mortar businesses in the States, is you go and see them or you have a Skype call with them, and you say to them, hey, Larry, what's your marketing strategy? How do you get leads into your business? And they go, this is what's great about our business, Cole. We don't do any marketing. It's all word of mouth. It's all referrals. It's all repeat customers.
Right.
And they think that's cool. It's really cool for me because I know that as soon as I become the owner and I put in some new age marketing, leveraging social media and all of the marketing stuff that I know, we can very, very quickly scale that business. And that's all kind of upside, which the seller hasn't brought in because a lot of them, they were just happy kind of ticking over, low growth, didn't want to do anything, really sophisticated. So, so this is a lot of fun.
I love that. You answered my next question was, what's the first thing you do to increase the value of that business so you can sell it in a year or 2 or 3? And it's marketing. I love that. So I have one final question for you is, where do most people go to find these businesses for sale?
Yeah. So here's the mistake most people make. Most people only go to business brokers. So they'll go to a business broker, and that's where most people fall down, because the way the business broker market works, and it's a shame really, is 90% of business brokers are sadly, they're not very good. They're actually, they're immoral in a lot of cases. They will go out, they'll look at a business, they'll promise some crazy valuation just to get it on their books, get the listing fee, which can be, $10,000 a month in some cases. And the average broker will only sell 1 in 20 businesses. So we steer away from brokers, apart from brokers that have deals that have been on their books for a while,
right,
and the valuations have come down and they're prepared to talk sensibly about doing the deal. So we get most of our deals through networking and through leveraging social media, going to networking events, and basically it's all about your network. So I'll give you an example. So market data tells us that about 80% of people that sell a business, a small business, don't list through a broker. They're afraid of the competitive dynamic, and they don't want to pay the upfront fees. So if you're a small business owner and you're not going to list through a broker, you tell 4 people. You tell your spouse, your bank, your attorney, and your CPA. So forget the spouse. What we do is I teach people how to build those networks, how to penetrate those networks and get into conversations with all of these kind of deal intermediaries, because they can be excellent referrers of opportunities. Even talking to everybody that in business, customers, suppliers, partners, JVs, previous people that you've worked with. Everybody knows businesses that are for sale but are not listed. They're off market. So those are the best deals to do, because let's say, Larry, you wanted to sell your business, you've not listed it, you talk to your CPA, I'm networking with that person, he steers me to you, we agree a deal, I don't have any competitive buyers, because I've been brought to you, we're doing a deal. There's nobody else in that deal, negotiating against me. So
Right.
it's how we do most of our deals.
That's great. That's really good. So, as we mentioned a time or two already, we're going to have an upcoming webinar. We don't have a link for it right now, but hopefully by the time you see this, there'll be a link below this video or on the social media page for this video. But you'll also be getting emails from us as well. So, Carl, tell us a little bit about what are they going to learn on this webinar that we're going to do coming up? A few bullet points.
I am going to teach them, I'm going to give them my proprietary 10-step business buying system. Since 26 year, it's done over 300 transactions, over $52 billion in deals done. A lot of them were big Wall Street type deals, but that's where I cut my teeth. I was able to kind of boil all that down into, a very simple 10-stage process, what to do at each step of the way so that people can model it. I'll teach people, the most important thing when you're doing a deal is deal specification. What type of business do you want to buy? Is it something in a sector that something you're passionate about? Do you want to be the owner manager or the owner investor, which makes a difference on your location? And then I'll teach my deal origination methods and show you how to prepare for a seller meeting once you get an opportunity, how the numbers work. People think, this is what's so funny, people think, to do these types of deals, you've got to come from Wall Street or you've got to have an MBA from Harvard.
Right.
I got all that stuff, but doing these deals, it's like high school math. If you can add and multiply by 3, you can do these deals, and
right.
We'll talk about where the financing is for all these deals, and then I'll even teach people how you can go and find it's what we call contingent fee advisors. So once you've got a deal and it needs transacting and papering, we show you how you can get an attorney and a CPA to do that transactional work for you, but then you only pay them when you close the deal. So it takes all the risk, out of actually doing this. So I'll teach them my whole system. It takes me about 90 minutes to go through it. So make sure they've got notepads and pens. Take a lot of notes. I'm going to go through it pretty quickly, but it's really good stuff. There are a lot of people, hundreds and hundreds of people have watched the training webinar that I will deliver, and they've gone away and they've done deals.
That's awesome.
Any other touch points from me or anything like that. So, yeah, it's cool. I'm happy to do that.
That's great, man. That's great. I'm looking forward to doing it. We're going to be sending out an email soon, and I know the 90 minutes is going to be phenomenal because I already have a page full of notes right here just from today. So I'm really excited about that. So, Carl, thank you so much for being on. I really, really appreciate it, and I'm looking forward to doing the webinar soon and everything you have to share on that as well. And thank you so much for being on here today.
Thank you so much for having me, Larry. It's been a pleasure. Thank you.
Awesome. Thanks a lot, everybody.